Hi guys, good evening, and you're welcome to week two of the April's Forex Beginners Mastery class. So last week we were able to get the basic knowledge of what Forex was. We talked about what is Forex trading, what is trading Forex, why trade Forex. Then we stepped into um, the basics of market structure and also the basics of technical analysis, where we talked about the highs and the lows. We also talked about pivot points, chart patterns, talked about the indicators, the most common indicators we have that aids us to know the momentum change in the Forex market. Okay, talked about moving averages, the MACD, and the RSI. So now this week we're going to dive in deep into technical analysis. We want to understand the market skeleton before chasing moves. So that's the topic for today. As we can see on the screen. So we have our core concepts, highs and lows, that's a structure flow, our swing points, and we're going to be talking about how price moves. You understand? We're going to dig in deep. So stay tuned. So let's get into it. We want to know what price does because we already know price moves in waveforms, creating patterns, series of patterns through candlesticks. And this is something we've talked about last week. Now, how how does it flow? What's the structural flow of price? That's what we want to know. Yeah. So now, in a bullish scenario, okay, let's get to the chart. In a bullish scenario, let's just capital letters. So in a bullish scenario, yeah, using our color coding, taking this to be green. That is gonna be C. Okay, I think that's fair. All right. In a bullish scenario, price creates higher highs and higher lows, and it's noted like this. Price creates a high, pulls down, but doesn't break structure. Creates a low, breaks structure to the upside, pulls down, creates a low, creates a higher high, creates a higher low, creates a higher high, creates a higher low. Now, I'm going to write this. Right here, this is called higher high. For this, use this centered right here, higher high. Let's thicken this a bit to play. Okay, so now this is what price is doing. Price is creating series of higher highs. I'm gonna clone this. Creates below series of what? Higher low. Then we can clone this. High for the up top upside, price is creating what? Highs. Remember, I said price moves in three ways. Moves bullish, bearish, or it consolidates. It ranges. So in a bullish scenario, this is what price does. Your first higher low is still saying higher high. Which one are you talking about? Could you clarify? So this is it. Which one? This one right here. Could you clarify? You can mark out the screen again so I can see it. This is higher high. This is a higher low. Higher high, higher low, higher high, higher low. This right here, price is coming from a higher low. You should understand that, right? This is a higher low. Well, because I didn't want to use this, I wanted to start from a higher high so we don't get confused. So price is coming from, oh, okay, okay. So price is what? Creating what? Higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low. This is what it looks like. And remember, this is what in the bullish scenario. Okay, this is so we know it's bullish. I want to take my time to explain this. Okay, so this is it. Price came up here, created a skeletal structure. This swing creates a peak point and it comes down. So far, it does not come below this low that has been created. But better still, let me use a better analogy. Okay, let me use a better analogy. So price is coming from a level of support. Price is coming from a level of support. And price starts to create a bullish swing. Rallied up, came down. It did not break below. It broke this high, created a high that is higher than this one. Then price came down, created a low that is not lower than this one, than the previous low. Then went higher again and created a high that is higher than the previous high, but could not break the low that is lower, the previous low, right? Then broke the most recent high, came back and created another low, and broke what? The most recent high. So this is how a bullish trend looks like, the basic skeletal structure of a bullish trend. Creating what? Series of higher highs and higher lows as illustrated right here. Okay? So now price created what? From a level of support, created what? Higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high. So now we know right here, this HL right here, the higher low. If price is to move again, what would price likely do? Price will likely move what? Higher, creating a what? Higher high. Okay? Sorry. Someone is trying to join the class, but can't seem to join the class. I'm pretty sure. Let me just resend the link to the person again. So do we understand now what I'm preaching here? Okay, so that's it. That's basically what it looks like. This is a bullish run in a bullish scenario. Now let's go for a bearish scenario. Price is coming from a what? From a level of resistance. All right? in our part 2, price starts to create a what? A trend down. Creating was lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. Now, let's mark that out. This is our lower high, right? LH, represented as LH. And this is our lower low, represented as what? LL. Now we can clone this and mark out on our lower lows. The same way I'm doing it here, this is how you're going to do it for me, like when you're doing your activity and when you're submitting your assignment, because we'll be having tests later by the end of this month, okay? So I want you guys to like be aware. And let's mark out our lower highs now. Lower highs, lower highs, lower highs. So now, what's price doing? Price is creating a series of what? Lower highs. Now, go for another structure. Yeah, let's do another one. Price came from a level of resistance, did something like this. Lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower. All right. Make this look fine. So now, let's go back to a high letter. We know price came from a level of resistance. I said giving us a what? This was a lower low. Give us a what? Lower high, lower low, lower high, lower low, lower high. Why? Because this high is lower than this one. So we call it a lower high. You understand? This low is lower than this one. We call it a lower low. This one is lower than this high. This one here is lower than this one. So we call it a what? Lower high. Yeah? So lower high. And this low is lower than this, right? So we call it a what? Lower low. Then we have a lower high and a what? Lower low. Yeah. So this is basically what our market structure looks like. This is it. This is what in a bullish trend, and this is what in a what bearish trend. Let's change this. Bearish. Let's put a trend for formality's sake. So people can have like clearer understanding of what you're talking about. All right. Good. This is bearish. This is bullish. But let's put this here. So now this is what it looks like. Price, this is what market structure looks like. Let's go back to our core concepts. We talked about number one, higher highs and lows. That's a structure flow. Then we've spoken about what? Higher high, price breaking above previous high. Talking about higher low, price forms a low lower than the last one. And the lower low, price breaks below previous low. Then the lower high, price forms a lower high. All right. So now, if you look below, we'd say this creates the internal structure flow, micro, and the external structure breaks, macro. This is what we're going to be learning in our class later tomorrow, breaks of structures and change of character. Okay. But for now, let's do something extra. Let's dive into the range. Let's dive into the range market. We already know this is what the bullish trend looks like, and this is what the bearish trend looks like. Let's look for what a range looks like. Yeah, let's look for what a range looks like. Range. You call it range, or you could call it consolidation. This is when price is in between a support and a resistance. This is what a range looks like. Usually the highest point there will be a resistance, be acting as resistance. Did something similar like this last week. But why I'm giving this is so we can have a structure, a better structure to understand what we'll be doing tomorrow. But I'm going to give us insight on that later. We'll see. Then we have the support. All right, this is just the basic way it is. It could be structured in different ways. You could have your support and resistance this way. You understand? It's not fixed. It doesn't have to be straight. While up here could act as your watch resistance, here down here could act as your watch support. Okay, it could be structured this way too. It's not fixed. It could be in any way. It could be in the form of a channel. But we're going to get to that soon. Okay, guys. Now this is our resistance. This is our support. Okay, so in support and resistance in a range, market moves from support to resistance. It doesn't break till it has enough volume to break. They call this a range. They call this manipulation. They call this consolidation. This is where market is at its lowest volume. Yeah, it's not trending. You want to be in a trending market. You don't want to be in a consolidating market. So this is how price moves. It moves from a level of what support to a level of resistance, or from a level of resistance to a level of support. Either way, it works vice versa. It comes down, bounces back up, bounces back, bounces back, bounces back, bounces back, bounces back, bounces back, creating something looking like what waves. Understand? So this is what it looks. This is the basic structure of what the range looks like. Let's give us another structure of what the range looks like with better understanding. Okay. So now let's clone this. Now let's clone this. Okay. So now market moves from a level of what, let's say resistance. This is how it moves, internal structures. Creating a downtrend. Then changes to an uptrend. So this is what it looks like. I'm going to explain to you why it changed, how it changed, and how would you be able to know when it should change and when it should not change. Yeah. So this is typically what it looks like. What I did earlier was the simple structure. So what I did earlier, yeah, was a simple structure. This is basically what it looks like on the inside. Reduce this to 2 so we can see it. So this right here is this. And price will continue like that, changing character, repeating the same thing. Now, in this kind of markets, you could buy down here and you can sell short up here. Basic knowledge about Forex, buying and selling when the price is what? Buy when it's low, sell when it's high. in order to make profit. So do you have any question? I will entertain questions now based on this because when we move to the advanced level, I will not be coming back to this. This is going to be a long series, no doubt. So if you have questions, I think we still have like really good time, okay, to entertain that. This video is going to be like really short, then way too bulky for people to understand. All right, no for now. All right, so it's very self-explanatory. That's good. I appreciate that. So now we're going to be moving into what I call break break of structure. That will be for tomorrow. I think I'm just going to give us insight on that particular topic. So you can get ready. Um, Trying to get the notes down. So we've covered this already. What we'll be covering next is we're talking about liquidity and other blocks together with break of structure and a change of character and identification. I'm pretty sure over time you've seen something that looks like this. Uh, Seen when people write something like this, change of character, CHOCH. You've also seen where things like this, BOS. While this represents change of character, this represents break of structure. You understand? So these are key these are key things we need in the forex space to be able to know, especially market structure. You need this, you need to know this. You need to know when market moves from a bearish move to what a bullish run, and I said and break structure. What I did right now is I just gave us an example of what it is, but I don't think he might be able to grab it yet till we get into that topic tomorrow. We want to understand what does it mean for markets to what keep breaking structure, and what does it mean for markets to what break to change character. You know, market was what formerly bearish, and now market has changed character, and market now has come to liquidate to grab liquidity and break structure and keep breaking structure. And what changed character? Understand? So this is what we're going to be doing tomorrow. Today's note, I don't want it to be too long. This is it. We're able to identify the skeletal structure for technical analysis, the bullish trend, when price created a higher high and a higher low, and its expectancy to always create what a higher high, because we expect based on historical data, whenever price creates a higher high and a higher low, what you expect next is a higher high, except if there's a change of character. If there is no change of character, then market should break structure in the required trend, okay, or the expected or anticipated trend. So that's it. Same thing for the bearish trend and consolidating markets. We already talked about how it is ranging and bouncing between support and resistance, and you can still trade it because inside of it, the internal structure, we have both bearish and bullish movements, just like we talked about right here on our topic. Okay, this creates an internal structure of low micro and the external structure breaks macro. So I'll see you guys later. Someone just joined us. I'm sorry you joined pretty late and we're ending the lecture, but the video will be available on YouTube. So I'll send in the link to the group, send it to you. If you're not on the group, I'll send it to you personally. So I'll see you later. If you have any question, you could throw to me at the end. Thank you guys. Thanks for coming up. I really appreciate it. Bye.